Test, test, test. Is the audio, how is the audio sounding? Is it clipping? Is it coming through? Of course, I start my stream and a fucking garbage truck comes by immediately. Wow. No, we'll wait for you. Garbage man. Jesus. I have a couple filters on there, so I haven't tweaked with the settings yet. I just want to make sure the audio, I don't see it clipping, so it should be silky smooth for you guys. Okay, so first and foremost, I'm trying out some new streaming software. For those of you guys who are streaming nerds and into that kind of stuff, you'll see that I'm using Streamlabs, which is pretty cool. It has a lot more functionality than OBS does. And one thing you'll notice at the top is you'll notice at the top is there's a count for Twitch and YouTube viewers. Some of you guys don't even know, but I usually stream on Twitch. But I see right now it's not putting the count there, so I'll have to look into that. Okay, I'll have to make a note. Check the Twitch and YouTube viewers. And just the stream is going to be on YouTube this time because I want to work out the kinks on YouTube, and then I'll mess around with Twitch because sometimes you have a little bit of like buggy stuff with their API. So I want to sort that out on YouTube first, and then we'll migrate onto both platforms. What else? Also the chat will be popping up on the stream, but it'll be. So that's what I was testing before the stream. Test. It'll pop up, or it should pop up like somewhere right here. Yeah, you see it on the bottom. It'll pop up and then it'll go away after like 15 seconds. So the chat will no longer be intrusive, but it will be included in the stream so that people on Twitch and YouTube can see it. What else? I think that's all I got for housekeeping. All right, let's talk about the actual markets. So let's start macro, and then we'll work our way in. So starting macro view, I want to start on the weekly, and then we'll work our way in. So let's get rid of Bollinger Bands, and let's go straight to the cloud, and we'll take this view off. So I don't think it needs to be stated, but I'll go ahead and do it anyway. Very bearish setup on the weekly cloud with the default settings. I don't use the adjusted settings that Josh Olszewicz likes to use. Not that there's anything wrong with it, but it just gives different signals. His has a little bit more lagging time, and this is a bit more responsive, but it just depends on your trading style, so there's nothing wrong with either one. First thing we notice is that we closed the last week candle with a bearish engulfing. It's called a bearish engulfing candle. What that means is that the entire body of the current or the previous candle engulfed this guy. So this guy engulfed this guy, meaning that the entire spread overshadowed the entire body wick to wick of the other one. So this, combined with it penetrating through the cloud, also combined with the Chiku, which is the lagging span right here, penetrating through the price, is not looking good. Okay, we have so let's make a little list here. We've got the Chiku. I think it's how you spell it. Chiku, or is it Chiku? I'll just say lagging span. I forgot how to spell it. Lagging span. Yeah, so lagging span. We've got bearish engulfing. What else do we have? We have a bearish twist on the Kumo. Bearish twist of Kumo, which is here. We see that it flipped to red a couple of candles ago, and now we have the price trending through the cloud. Or price, we'll say price under cloud. And not only that, but this happened a couple months ago. We have a weak bearish cross here, but this is the least of the worries. This, this, and this are the biggest concern. We are kind of getting overextended from the Tenkan, which is this guy, and we're very far away from the Kijun. Kijun is kind of like this. It's the equivalent of like a slow moving average. So if you guys like to use like the 50/200 EMA, this is the equivalent of like the 200. It's the slow moving average. It's the market equilibrium on a longer time frame, and we're very far away from it. That doesn't mean that the Kumo can't catch up, but something. I'll add one more thing. This candle closed a new low. I don't mean a new low in terms of like price here. I mean in terms of like it closed a new low here. You see here, if I could draw a perfect horizontal line, you'd see that this barely closed a new low. So lots of bearish activity pushing through the cloud here, and it's not looking good on the weekly. Okay, and if we look at the Bollinger Bands on the weekly, we see, I'll go ahead and add BBW, which is the Bollinger Band width. It's just a visualization of how wide the Bollinger Bands are. They're still contracting. We've been trending beneath the midline, and we're still getting a squeeze on the Bollinger Bands. But the further we drift down, the more they're going to start to expand. So this squeeze doesn't mean a whole lot right now. It just means that overall the market is still consolidating, even though we're pushing new lows and we closed a new low on a macro time frame. This is still consolidating. So right now we have what can we say about the market? We could say that it is a very bearish setup for a very sustained bearish move, but we're not quite there yet. We're on the cusp of this breakout, but in my opinion, we're not there yet. Okay. As we zoom in to something like the 3-day candle, I really like 3-day candles. I mean, this looks like shit, right? So, if we finally broke the volume consolidation, you could argue it becomes more apparent on the daily candles, but for right now, we'll say on the 3-day. So volume was once. Let's make this black. Volume was once consolidating, and now poked a new high. It didn't quite break the moving average yet, but it is certainly noticeably higher than the previous few candles. Not only that, but now the Bollinger Bands on the 3-day are starting to expand. Okay, you can see here we bounced right off the bottom of the Bollinger Band on the 3-day, thus invalidating the 3 pushes to a low setup we had perfectly displayed before. So we had 1, 2, this was the 3, and then it got invalidated after these doji candles reversed. And when we look at the cloud on the 3-day, it looks like absolute shit. So let's take a look at that. Okay. If you could ask for a perfect bearish setup, this is it. Okay. So let me get rid of the Bollinger Band width here. This is the perfect bearish setup for I'll go through the list. Okay. So first and foremost, we see this thick ass Kumo. Thick ass red Kumo. Okay. Not even close to being consolidated. We see a cross, recross, thus making a, let's make the note over here, a strong TK cross, And with the recross, that's like, this is set up for a continuation. When you get a cross recross and you're below the cloud, this is just like really fucking bad. Not only that, but we came up and we tested the Tenkan, which is this blue line, and it rejected it. So boom, Tenkan. Rejection. And we see the Chiku span, the lagging span. It's through the cloud, fully through the cloud, and it's trending beneath the price. So this is, if you could have like a checklist of like check everything that's really bad for a bearish setup, this is it. This has everything you're looking for. Okay, so on the 3-day perspective, it is extremely bearish. Okay, I pointed this out a couple of days ago. I pointed out this impending cross, or the recross. I pointed this out, I guess, a week ago, and we got a really, really strong cross here. Okay, this is called a strong bearish cross. It's called a strong bearish cross because it's beneath the cloud. If the fast moving average crossed the slow moving average up here, this would be called a weak cross. If it crossed it inside the cloud, this would be called a like a neutral cross. Because it's below the cloud, and it's like way below the cloud, this is not good. Those are tears. Okay, so that brings us to the daily candles. Let's go to the daily candles. In terms of the cloud's not really, during consolidation periods, the cloud's not really a great performer. So like you can see here, it's like really choppy, not really giving the best continuation signals. You know, you do see the bearish Kumo. We're trending beneath the Tenkan and Kijun. The lagging span is beneath the cloud and price. So yeah, there are bearish signals, but during consolidation, the cloud's not really the best tool. But if we look at something like the Bollinger Bands, which is really great for consolidation, we see that we had a really, let's pull back up the Bollinger Band width. We see that we had a really tight squeeze, and it just immediately rejected. Well, not immediately, but you know, it had its chance to rally. Coming into the squeeze, we saw that the price finally trended above the midline of the Bollinger Bands for the first time since beginning of May, you know, up here, and it just couldn't stay afloat. And going in and coming out of the squeeze, we now see the expansion of the Bollinger Bands indicated here, and we're just like way outside the Bollinger Band. So I would not be surprised to see the price trend sideways a little bit longer, or even come up and retest the Bollinger Bands. Maybe even retest the low, but this looks like it's set up for a strong continuation. Okay, so just a quick refresh. Last time we did this, we had something like this. So we had the squeeze, we stayed above the midline, it broke below the midline, and then it just continued downward. And yeah, so big difference here though is the volume. Okay, so let's talk about the volume. We see that there was an obvious consolidation trend on the volume. It was going down. We can see it on this blue line here. And then we basically doubled the moving average yesterday on the breakdown. And we can see here, if you're familiar with the patterns that everyone's been talking about, there was, you know, a really nice symmetrical triangle here. And it clearly broke down from that. And this, in my opinion, is breakout volume. Okay, this is breaking down in a way that says likely consolidation for a continuation. Okay, so the cloud is supporting this, the B bands are supporting this, and now the volume slash price levels are supporting this. Okay, this is the setup to a continuation of the bear market. Okay, And you're starting to see the first signs of it too, in the sentiment. Like if you go on crypto Twitter, people are starting to become people are starting to become dickheads again. Okay, during the consolidation, I feel like the douchebaggery was starting to consolidate. People weren't as big of dicks. Like there's a general indicator I like to call the dick meter, where people start to become, you know, those like I told you so kind of guys, and people who were giving bullish predictions are now getting shat on by the I told you so guys. And they're starting to become more militant, and they're starting to post really absurd reasons for why the market is moving, rather than just acknowledging that the market was overdue for a move down, right? They're starting to say like people are blaming that like that random fucking Korean exchange that had, it was like number 76 on the market cap. And I think yesterday's 24-hour volume was like 2.5 million. It was like something stupidly low. Like if you go on Bitfinex, that's like, I don't know, what is like a 10th or like a 20th of its daily volume on just Bitcoin alone. And that one Korean exchange, everyone's like, oh, it got hacked and that's why the price dropped. No, people are just coming up with dumb reasons for why the price is dropping. They're in denial. And this is, this is what capitulation looks like. People are just looking for reasons why it's dropping instead of just acknowledging that, like, yeah, the chart was giving signals and maybe you should have paid more attention to those signals. Okay, so before we go any further and talk about the price levels and projections, do you guys have any questions about any of the stuff that I covered? What if they actually told them? I don't give a shit if you actually told people that, honestly. It kind of just makes you look like an asshole. I don't really see any reason to be like, oh, I told you so, bro. Like, it just makes you look like a douchebag. Just acknowledge you were right, and sometimes you're gonna be wrong. Who gives a shit? No questions about any of this stuff? Did you catch the short? No, I did not. I took a risky long right on the daily Bollinger Band on the bottom, and I got stopped out. So I did not catch the short. A bunch of people in my trading group did, but I had a lot of faith in the three pushes to a low set up on the 3-day, and I really should have just looked at the cloud. The cloud was a way better indicator and way more reliable for the macro trend, and I got stopped out. So what signals could we have looked at? Okay, that's a good question. What signals could we have looked at prior to the trading range that would have told us this was redistribution? The 3-day cloud was a great indicator. On macro scales, cloud is a really great tool. As long as you're not getting like that chop that you see sometimes on the cloud, like what you see here on the daily. So like right now, like I don't like the daily for this kind of shit. Some people are really good at it. I don't like it. I like really clean signals. So the 3-day is a really great clean signal. You don't see a lot of the choppiness where the Kumo is flipping green, flipping red. The price is going up and it's going down through the cloud. This is more of what I like to use the cloud for, but this would have been a really great setup and a really great heads up as to what you could expect from the price. Do you think this move is mainly organic or actions by high frequency trading bots? I think it's organic. Yeah. I mean, I don't really know what organic volume means. Like there's always trading bots. There's always high frequency trading bots. Because I subscribe to the sort of idea of the composite operator having an influence in the market. What we're seeing right now is the composite operator from like the Wyckoffean sort of theory is the composite operator is not sponsoring these moves, and he's unloading a lot of volume onto the market. Okay, we're not seeing the composite operator being interested in buying. He's interested in propping up the price just enough to sell. And that tells me that we're in for lower lows, most likely, and coming up in the future. Another question. If we move sideways till mid-July, would you consider that bearish or bullish? Depends on how sideways, and it depends on, that's a really vague question. I don't really know how to answer that. Do you see any arguments for fake out / bullish consolidation? Or I'm sorry. Do you see any arguments for fake out / bullish considerations right now? I don't see many arguments for fake out. There are too many things that are showing, you know, again, the cloud, the Bollinger Bands, the weekly cloud. These are all saying that like a macro move was long overdue, and this is the beginning of it. Okay. I don't see very many bullish arguments. There is one. I take that back. Okay, there is one that, and I don't even necessarily call this a bullish argument. I'm kind of more calling it the bullish last bastion of hope. You know, like you can construe the symmetrical triangle. That was a good symmetrical triangle. Proud of that one. You can construe this to be a descending triangle. You know, something like that, where you know. You chop off some wicks and you say it's like this, and we're approaching support here. Mainly what I'm looking for, before I go full-blown bear mode, I mean, if it wasn't clear already, I'm leaning bearish, obviously. But what I'm mainly watching is the interaction of price and volume with this low right here. Okay, this was the low of the last accumulation trading range. This dashed blue line here. And if we break below this, if we break below an accumulation trading range, that's, in my opinion, that's the beginning of a sustained, that's the beginning of high confidence in a sustained move downward. Okay. This was an accumulation trading range. It accumulated for 2 to 3 weeks, I think, there. So if we break below this level, we're currently sitting inside it. This would be bearish, obviously, but it would be significantly more bearish than the current move we're seeing now, just by the fact that it dropped below where the composite operator was consolidating. Something to keep an eye out for that would be a bullish consideration would be if we go here, we test this low, and we make a trading range here, and this is another accumulation trading range. Okay, if this is another accumulation trading range, that means that the composite operator has a line in the sand. He's saying, I'm not selling below this, and everything below this level, I'm accumulating. So keep an eye out for this price level, and that price level is, you know, 64.50-ish. Keep an eye out for how the price interacts with that price level. And if we see a high volume pop through of that bottom, I'm fully expecting to see some consolidation here, maybe a redistribution and push down. But if we push through this, that will invalidate the last hopes for the bulls in the immediate future. Here's a question. Do you prefer to use fewer Do you prefer to use fewer indicators and bear trends? Multiple indicators seem to skew perspectives. Yeah, I just in general, I prefer to have a simplistic view. One indicator I have been playing around with, it's called the SMI. Someone in my Discord tuned me into this one. It's called the Squeeze Momentum Indicator. Is that what it's called? Squeeze Momentum Indicator? It's made by Lazy Bear. He does a lot of really good indicators, but he made this one. And it's basically a cleaner, less noisy version of the MACD oscillator. And it's been giving really great signals on stuff like the hourly. I'll show you some indications there. So on the hourly, it's been really great at indicating potential bottoms on impulsive moves. And it's been really great at calling these like little green beans and red beans and rice here, as we've been calling them, the BARTs. Okay, so here are a few examples here. We see that the price is pushing low, even on really good volume, but the SMI is diverging. And you can see here as it made this final push low on a divergent SMI, at the very least slowed down the downtrend, and we got a little bit of bouncing action here. And then here we had divergence here on this push down. And then of course, really great added confidence on the low volume here. Again, divergence here as the oscillator rounded out, led right into a BART. Same sort of story here. We pushed a new high, it was divergent, it popped low, and again here. Another great time frame is the 2 hour. The 2 hour called, or maybe it was the 4 hour. I'm still playing around with it. So the 4 hour called the top of this little move and the bottom really, really well. So you see here when we hit that little spring / sign of weakness for this rally, it was on highly divergent 4 hour candle, and vice versa on the top, it was divergent on the 4 hour as well. And I think it had another good call on the 4 hour. Yeah, right here. There were a couple good calls here. So there was a right here on the 4 hour, we see divergence here, and on this top, we saw divergence there. I think we even saw divergence here, but again, this is called the SMI, the squeeze momentum indicator, and that's by Lazy Bear. So it's a tool that I'm still playing around with, but if you're interested, check it out. Let me know your thoughts. And maybe we can come up with some good time frames. I found the daily to be really nice too. The daily called this V bottom very nicely. It called the bottom of this accumulation very nicely. It called the top very nicely here, and it called the top here very nicely here. So both, all of the macro swings we've seen, this indicator was very good at pointing that out. So we see the V bottom here on divergence. We see the double top on divergence. We see the accumulation bottom on divergence. And we see this top on divergence here, and currently seeing divergence here. Okay, so again, this is as we enter in this price level, keep an eye out for this divergence here. If we form a trading range here or whatever, then this will be nice to check out. Okay. So I hope that answered your question. This is really, I'm not really interested in momentum indicators right now. They're giving out a lot of false signals. There are a lot of good signals, but they're interlaced with bad signals, and I don't like the signal to noise ratio. So, but the SMI has been very, very good. I'm sorry, we got a lot of viewers, so I'm having to go back and go through these questions. So someone said, I like what you said about the dickhead indicator on Twitter. Do you perhaps follow Tone Vase? I do follow a lot of what he says. I don't watch his streams. But I do follow his Twitter feed. From the perspective of the macro symmetrical triangle, we see the price target is around $50. The perspective of the macro symmetrical triangle is not $50. The price target from the symmetrical triangle would be, what is this? This is a $5,500 move. If we broke down from here, it would be, somewhere in the 1 to 3K range. Definitely not $50. I don't know where you get that. Appreciate answering the questions in the live stream, man. Really dope shit. Thanks, man. If you I guess this is a good time. I haven't been paying attention, but if you guys follow my YouTube channel, it gets a fun little notification. If you guys remember from my Twitch streams, I had my little carrot notification pop up, and I brought that back. So I'm really happy to get that thing popping back up, because it gives a little flair to the channel, or to the stream. And if you like these streams, go ahead and drop a like or subscribe to my channel. It helps with my metrics, and it also helps with just overall exposure to new viewers. So any little bit like that helps. Trying to get my numbers up. Bitcoin will rebound soon, maybe. We'll see. Yeah, see there, it just popped up. Oop. I had a little noise going in there, but I wasn't sure if it was going to be annoying to have it constantly coming in, so I just left it out. Okay, so what do we got? Major movement coming. So are we going down to 4K? But dude, try to consolidate your text into like a single block of text, because when it's interlaced into the other chat, it's very hard to follow. Litecoin, Bitcoin it would be weird for it to. Litecoin, Bitcoin looking bearish, or is it support? Or Jesus, I'm illiterate. Litecoin, Bitcoin looking bearish, or is support looking strong? It's kind of broken below where we were. We'll take a look at Litecoin, Bitcoin once I discuss the macro targets of this, and we'll talk about a couple of the coins. I don't want to get into a lot of the coins, but a couple of the ones that I've been talking about a lot we'll follow through. Peter Brandt called Litecoin for $30. What do you think? Okay, we'll talk about it. Plug the Discord. Okay, yeah. So I'll go ahead and take this moment to show my trading community. If you're interested in getting more access to me on a daily basis, I spend most of my day in my Discord, and if you'd like to get access to that, go to bitcoinschmitcoin.com. Also, I'm really excited about this. I know I talked about creating a video. I've been talking about creating a video series, and I'm finally like sitting down to do it. Now that I don't have any major tournaments for my jiu-jitsu coming up. I had that this weekend, and I won. I'm a champion in both crypto streaming and jiu-jitsu. So I finally sat down, made it a bit more professional. So it's not going to be as casual like we're doing the stream. It's going to be more of like a lecture series where I break down really fundamental concepts. I just finished talking about candles, candle spread, really basic shit, so that we can have a firm foundation and a go-to resource for the crypto community, and ultimately expand into more complex topics like Wyckoff theory, Bollinger Band setups, different oscillators like RSI, MACD, all that stuff. And that's going to be available through my YouTube channel on my website, completely free. But I'm really excited to actually sit down and make it. I got a dude to make me some flashy little intros for my videos and all that stuff. So fun stuff coming ahead. But again, if you'd like to join my trading community, go to bitcoinschmitcoin.com and sign up today. How did my match go? So my match was 2 rounds. First round was tied, and the second round, I got a very huge lead in points, so I won by decision. I got a 15-point lead on the guy in my second round. I got like 4 near submissions, and I got a bunch of points for that. But yeah, it went really, really well. For those of you who know, like I took a lot of time off from streaming because I was preparing for that, and I really wanted to focus mentally. So I didn't do a whole lot of trading. I didn't do a whole lot of streaming. Didn't do a whole lot of chart posting on Twitter because I was really, really focused on that fight. And but now I'm here for you guys. I feel refreshed, rejuvenated, and I really want to get some content out for you guys. Okay, questions. Wonder what the Wyckoff guys will say. Yeah, I'm sure they'll probably try to fucking sue me or something. I see a lot of crypto Twitter people putting the lower line of the macro trading range around 6640. 6640. Where's 66? Yeah, okay. I mean, I could see that, like, basically, like, right here, saying, you know, like, that the trading range would be somewhere like here, where this would be your selling climax, this would be your secondary test, this would be a secondary test, and yeah, I mean, there are some similarities between this and some of the historic accumulation trading ranges, but yeah, again, like I said, this is going to be an important level to watch, this band of prices, because this looks a lot like a creek, if you're familiar with like what a creek is, and especially if you look at this at the 12-hour view, this looks a lot like a creek, and this could potentially go into a spring for an accumulation trading range. So we got to keep an eye out on this price level and see how volume and price interact with that price level. That's going to give us a lot of insight into what we can expect in the future. Is Ethereum Classic a good buy? I don't think anything is a good buy when Bitcoin's going down. So I wouldn't even be thinking about doing that. You think we've had the selling climax already? No. I'm saying like if like through the lens, I'll draw out a hypothetical trading range for you. So there is an argument to be made that this is this whole thing right here is an accumulation trading range, where this is the top of the. Let's make this blue and thick with 2 C's. God damn it! Give me that. So there is an argument to be made, a bullish argument to be made, that this is a trading range like this, something like that, where this would be the selling climax, this would be the secondary test. These together would be secondary tests, or I guess this would be the automatic reaction. This would be the secondary test. This would be a secondary test of support, a secondary test here. You could argue that this is a sign of strength because it had this like jump across the creek sort of dealio here. So you could say this is like a jump across the creek. And then this would be, this looks, when you're picturing a creek in a trading range, this is kind of what you picture. Like you picture this meandering, like shittily trending price structure where it's like not very clean and it's just kind of meandering here, never really finding solid support anywhere, which is basically describes all of this. It's like it had very loose support, very loose resistance, volumes consolidating. This sort of thing would be, if you're going to look for an accumulation, this would be what we're looking for a creek, and right now we would be heading toward a secondary test of the lower boundary of the trading range and potentially into a spring. Okay, this is if you're looking through the eyes, if you're looking for a bullish argument, this is it. Okay, this would be an accumulation, and I can show you guys, if you're interested, I can show you a couple of charts that actually support this argument. I'll have to dig them up, but this isn't like a far-fetched idea. Within the context of the cloud, oh man, that doesn't seem likely. It really doesn't look like that's what we're gonna get, but this isn't out of the question. But man, those macro indicators do not support this argument very strongly. Do you guys want to look at a potential? Yeah, let's go ahead and look at it. Let's look at a potential accumulation trading range that matches this price structure, just for education purposes. Let me see if I can find it. as someone put on my Twitter, it's beginning to look a lot like eBay because it's the eBay chart. Okay, let me zoom out. And let me get rid of the SMI. Let's go to the Wyckoff stuff. So if we're looking at a trading range that's, God, there's so much shit on my chart. Man, I really wish that that TradingView would enable layers like AutoCAD, and the fact that it doesn't, it's amateur shit. TradingView, get your shit together, or someone's gonna one-up you, and you're gonna lose business. Okay, so can I fit both of these on here? Put this here and yeah. Okay, let me do this. Sorry, I'm like doing something off screen. Okay, so it'll be like this. There we go. All right, so this is the eBay chart. Okay. Where'd my pen go? Okay, so here's the eBay chart, and it matches the price structure very well. I posted this a long time ago, but okay, so let's go ahead and label this bad boy. We'll label it in blue so it matches matches the chart. Okay, so we see the selling climax. So selling climax must be here. We see the automatic reaction. So here we see a secondary test, which is this guy. Keep in mind, this isn't labeled as such, but it is a secondary test. Okay, there's a secondary test here. Secondary test. We see this sort of failed rally sort of thing here, which is like, we'll say, you know, whatever. Okay, and now we see the creek sort of meandering. And what's important to keep in mind here, and this is the best argument that it has going for it, is not only the price structure, which is like uncannily similar, it's the volume structure. Okay, so as we approach the selling climax, let me go ahead and add this on here so we can have some consistency. So what do? They do that, and then they go down here. Okay, so let's go ahead and label the volume structure, because that's really what's important here. Okay, so we see obviously a swell of volume here, so swell of volume, cool. But what's important to note is that the volume going into the automatic reaction diminishes all the way through to the secondary test. So we see boom, boom. Okay, we see a swell of volume going into a swell of volume and like a selling climax sort of thing. So we see this guy is going to be right here. Okay, we see you know, a pop-up of volume leading up into this little node right there. So, you know, good volume, but overall we see the volume is decreasing and it's consolidating, leading into this bro right here, which is this bro right here. Okay, so overall volume is going down. Let's make it like this. Overall volume is going down. Overall volume is going down. And then we see here, this is called a spring, a number 2 spring, okay, which is a high volume spring that doesn't really make a whole lot of headway. We see it labeled here. The best argument here is that we're going to pop a low beneath this secondary test and beneath this selling climax. So somewhere down here, somewhere below 6K, and it makes us a spring, okay? But leading into that, we see increasing spread, which is like if you're thinking about what a creek actually is, like think about like this is what Wyckoff describes as you see a you know some dude, right, some little kid, and there's a creek, okay, and the creek varies in width, and so in order to jump across the creek, you need to get a running start to do that. Okay, the running start to jump across the creek is the spring, but in order to load up the spring, you have to really like you have to run back and get a good running start. So typically leading into a spring, we see increasing spread. A lot of times we see increasing volume if it's a number 2 spring, and that's what we're seeing here. So we're seeing very wide spread here. We see very wide spread here and increasing volume, and then ultimately like finds this floor where people just keep capitulating into this price range down here. So it stands to reason that you know, maybe we'll see a spring down here. That's why I was saying, again, that's why I was saying this price level is very, very important to keep an eye on, because depending on how the market reacts to this price level and where it sends it next, that's going to tell us if we're going to see a spring into an accumulation. I'm sorry, a spring within an accumulation, and a rally to new highs, or a continuation of the downtrend. Okay, so there is a bullish argument on the macro perspective here. So don't rule this out, and don't, you know, well, I'm not gonna tell you what to do. You guys are gonna do whatever the fuck you guys want to do anyway, and then tell me you were wrong on Twitter. So, but this thing that I posted fucking forever ago is not out of the question, and it looks very similar right now. So remember this, okay? All right, some questions. What supports the argument that the selling is comp low? I don't know what that means. Manipulations, handling. Okay, that's just a fragment of a thought. I don't really know what you're saying there. All right, I mean, I guess that really beat Bitcoin to death. If this symmetrical triangle does break, if it does continue lower, I'm expecting to find major support here. If we look back, if you guys have been following me for a while, and we look back through historic parabolic blow-offs and retracements, they typically retrace back down to 78%. That's the normal retracement value, even on the lower time frame. So if we look at like something like this, the maximum they usually retrace before consolidation is 68%. So it stands to reason that 78%, that at the very least we'll see strong support here before any like puncturing of this price level, especially because there's a confluence of not only there's a confluence of not only that 78% retracement, but a fib extension of this bear trend is like right there. So, all right, what else? What else can we say? There's the fib extension right there. What else can we say? The hourly candle is closing. Can it tell us anything about short-term movement? Man, I'm starting to steer. So, full transparency here. I'm starting to really steer away from these hourly candle plays because the trends just look like absolute shit. And I'm gonna start trading more stocks until Bitcoin really figures out its shit. I'm gonna play macro trends like the 4-hour trends, you know, the 6-hour, the 12, and the daily. But I'm not really interested in these hourly trends. They're just like, they're not worth the time and the effort and the mental gas power, the mental capital that it takes to like maintain these trades. They're just full of stop hunts, and they just really fucking suck. So I'm really going to steer away from like hourly charts, 2-hour charts, and lean toward the 4-hour stuff, 4-hour and up. 4 hours the lowest. I'm going to start leaning because they're just shit setups, man. And people are settling for shittier and shittier and shittier setups and getting eaten alive. I mean, if you're consistently profitable in this market, that's awesome. More power to you. But you know, it's like I'll have a good win and I'll just have like a series of small losses that eat away at that big one, and I'm like what am I doing? You know, like this isn't worth the time or the effort. So I'm gonna play the bigger moves and just really step away from the intraday trading stuff because it's just it's garbage. Bitcoin is just being manipulated 100%. That is denialist reasoning there. That's similar to people talking about how, oh, this is because of the South Korea or because of the Korean exchange that got hacked. You know, it's like markets are always manipulated, my man. They were manipulated on the way up, but no one wanted to talk about that. Well, they're manipulated on the way down too. People are only complaining about the manipulation because it's making them lose money. There's always manipulation in the market. Sometimes it's profitable manipulation, but in a bear market, it's not so much. Okay, so I talked about Bitcoin. Is there anything else you guys want to talk about Bitcoin before I move on to Litecoin Bitcoin? Anything else you guys want to talk about in terms of Bitcoin? No? Last call. When are we hoping to see the bull run? Well, that's the big question. We don't know yet. If I knew that, I wouldn't be trading this stupid fucking market right now. All right, so let's look at Litecoin Bitcoin. First, let's look at the Litecoin USD chart. So Litecoin is in a really precarious situation right now because it was in this massive descending triangle, and it finally made a new low for the first time since February. And this thing, but the crazy thing is, this thing has like a stupid low price target. So right now, if this thing plays out to its measured move, which is 142 bucks, well, what's 142 minus 100? That's a negative fucking number. So I don't really know what to make of this current chart here. There's a lot of support, you know, down here. If we look at something like the volumetric support levels, there's very strong support down here, but we do see a node of volume support kick in right around here. So that might retard the downward slump of Litecoin USD. But what's most interesting, in my opinion, is Litecoin Bitcoin chart. It's been, in my opinion, an accumulation for a very long time. And it's holding last point of support very well. So despite what all the other coins are doing, you know, like you look at Bitcoin Cash, you look at Ether, Cardano, XRP, when Bitcoin took that huge dump yesterday, Litecoin Bitcoin wasn't very affected by it. It didn't move very much. It held its support, which is right here, really, really well. So if this is the case, then it's very likely that the Litecoin USD chart doesn't play out as aggressively as a lot of people think it's going to. I'm currently out of the market. I was playing on MEX. I had my stop somewhere down here, and that huge liquidation candle stopped me out. So I'm out of my position on Litecoin Bitcoin. I'm out of my position on Bitcoin. I'm out of my leverage position on Bitcoin. I am holding some Bitcoin for, you know, quick scalp plays, but and again, like I said, on the larger time frames, but I got stopped out yesterday on MEX because that stupid, like, MEX went down to like let's look at can I even pull it up on, is there a way to pull up BitMEX futures? Oh, what is it? I gotta pull up the what is it? LTC M18. Yeah, there we go. So if we look at Litecoin, like, look at that fucking candle. So you fucking got me, BitMEX. You douche. Stop me out way down here. But that's what I get, you know, for playing on MEX futures with low liquidity and high leverage. So if we look back again, so look at it. It went down to 1.4, you know, 0.0144. But if we look at Binance, it came nowhere close to there. Nowhere close. Like 144 is like down here. So it held very well on Binance. Basically what it was the leverage markets took a big hit, and it makes sense because of the liquidations. But the unleveraged markets, they held up very well. What else can we say about this? That's about it, really. You know, it's been pretty flat. We might see a spring. This looks like, if we look at this, man, Binance volume is so weird. Let's look at like Bitfinex, for example. Binance volume is so weird. What we might see, which is totally possible, is that this is like a creek, and maybe we see a spring down here. So, you know, like some sort of shakeout. But it's kind of just content, like chilling on this support here. Like, it's like just whatever Bitcoin does, like, okay, we're just gonna hang out there and do our thing, chilling at, what is it, you know, 155 or 0.0155. So, however, it should be noted that if this does fall through, not a lot of support for a long time. Next line of support is like, I think it's like, oh wait, I need to look at Bitfinex, don't I? Yeah, Binance doesn't have a long history. Next line of support for, come on, it's gonna be down here. So 0.0142, basically the bottom of this little trading range. So if this does break down, it does have dire consequences, but it looks content just to trend the way it is. So doesn't look likely, but this market's been pretty shitty. So just keep an eye out for that. You know, don't sit in a stubborn position just because you know, there's a bullish argument. Market, you know, that old meme, that old adage, the market can stay irrational longer than you can stay liquid or solvent. Sorry. Longer than you can stay solvent. What else can we talk about? When are we going to see the bottom? I have no idea when we're going to see the bottom. You don't know it's the bottom until you're there. We have a strong confluence of support on Bitcoin around 5,900 to 6,000. Macro downtrend channel, blah, blah, blah. And the bottom of the macro trading range. Yes, we do. Pretty likely it goes down with, pretty likely Litecoin goes down with Bitcoin heading downward. Yeah, I don't think Litecoin's, the USD pair is not going to go down. I'm just saying that the Bitcoin pair for Litecoin is holding up really, really well. You know, it hasn't really budged from support with all of these downward moves. You know, like if we look at Bitcoin, every time Bitcoin's made a shove downward, it's just held support over and over again. you know, it held support for the last $2,000 of movement on Bitcoin. So Bitcoin moved 2,000 bucks from 8,600 to 6,600, and it held support the whole time. So it's got firm support there. Trying to think, you know, really what you gotta look out for is like all these traps. Like the market is just full of traps right now, and the lower time frame you look, the worse the traps are. So I can't recommend enough that, you know, if you're getting chopped up with these intraday trades, just zoom out, chill out, you know, don't get tilted, don't feel the need to make money. If you're not trading clear-headedly, just chill, man. Like take a day off, take a week off, take a couple weeks off, clear your head, clear your account, you know, whatever you got to do. Don't just sit there and eat losses after losses after losses, telling yourself that you're going to make it up. That's never good. And I know a lot of people are in that boat because of how fucking angry they've been on Twitter. But you know, that's trading. It's 10%, you know, charts and 90% mental and discipline. So I guess that's good for today. Keep an eye out for my video series that I'm gonna have kicking out. I'm gonna call it Baby Carrots. I think it's a fun little name, and it matches my little ether carrot. So if you're interested in joining my trading community, again, go to bitcoinschmitcoin.com. Keep an eye out for the trading videos and the charts I'll be posting more of, and I'll be writing more articles for Bitcoin Magazine. So for those of you guys who like the you know, the text format of what I have to say about the market, keep an eye out for that as well. But other than that, I'm probably going to take a step back from trading the intraday stuff. That's not to say I'm not going to be charting it and looking for trades. I'm just not going to be acting on those trades as much. I'll be trading more of the stock market. There's some really great setups on stocks right now. The stocks are looking very ripe, and you know, just go where the money is. Don't sit there and beat a dead horse, so to speak. But again, go to bitcoinschmitcoin.com. If you like my videos, like, subscribe, and share it with your friends, share it with your mom, show her what a handsome young man you've become, and don't stare at the charts too long. Thanks for watching, and maybe I'll stream at the end of the week too. I'm trying to do a couple streams a week, so bye.